And we are live. Good morning. This is Travis Witherspoon from Carter Cow Capital, helping you fight for your financial freedom throughout the Forex market. I hope everybody's doing very well on this August 23rd, Wednesday morning. I have 7:03. What I'm getting ready to do is go through the disclaimer and actually talk about a trade that I just took this morning. It was very quick. It's a very quick scalp, and I'm trying to see if we can be able to get something out of it. Quite frankly, it's at a point to where it's at no return, but it's a very low risk to reward trade that we're going to end up taking. So I'm going to talk about this real quick. So I'm not a CPA, so I'm not going to tell you whether to buy or sell. What I'm going to do is teach you education, and from that education, you can be able to make your own informed decision about what you want to be able to do for Forex trading. Now, understand that Forex involves risk. It involves risk of being able to make money, also involves risk of being able to lose money. And understand that past performance is not indicative of future results, which means that if you end up making money yesterday, it's not promised that you're going to end up making money today. So with that being said, hopefully everybody's doing very well. Like always, I do appreciate each and every one of y'all hopping into the live sessions. Obviously, 7 a.m. is very early, but quite frankly, I trade at 2 o'clock in the morning. So if you're interested in being able to learn how we end up trading each and every day, you can be able to go to our Forex Trading Bootcamp. That's going to end up being from September 28th to October 2nd. Or you can go to cartercowcapital.com/start here, which is down here at the bottom on the actual bar, to where you can be able to sign up for a time that actually fits your overall schedule and being able to do that. So yesterday we ended up having a very good trading day and end up leaving a little bit of money on the table because we didn't trade after 2 o'clock, because typically there's a lot of low volume. The market actually ended up moving towards the extensions on the 2 hours movements that we end up looking at. But overall, when it came down to trading, we end up having a very good day. Now, today is one of those days to where you should see the market start to turn around and go against the overall move that is actually happening. So if the US dollar is very strong, we should see that the market should start to at least have a small little push against the overall move of where we're at. So let's talk about what happens with the economic calendar and everything else. If you would, please make sure that you end up clicking on that like button so I can know exactly who's actually on here and be able to see and go from there, so I can be able to talk to you and say hey. And also, if you could, please make sure that you share this video to somebody. It's very important that you end up sharing it, because obviously I do this so I can be able to help out everyone. So I want to hurry up and go through this. All right, so this market is actually moving, so I want to make sure we hurry up and talk about this trade. If we take a look at what happened a little bit earlier this morning, we ended up having manufacturing market PMIs. It was kind of a mixed bag. You can see in Germany, they ended up having a good number. You can see for the Eurozone by itself, the number was pretty off. And so I didn't see the market actually move all of that much when it came down to that pair, but it's something to be able to pay attention to. If you look at the pound market services PMIs, that number ended up being negative, so that should be a good thing when it comes down to looking at being able to sell on the pound. Pairs like the pound Swiss franc, pound dollar, and a few other pairs like that, you probably should see a little bit of movement when it comes down to that overall pair. A little bit later on today, what we're going to end up seeing is that we have Chairman Powell going to end up speaking again at 10 o'clock. And typically, once he talks, the market moves. So you just got to keep that in mind and see what he's going to end up saying. And then after that, we're going to end up having a leaders summit that's going to end up happening a little bit later on today. Now, going into it, I want to talk about a currency. I'm going to talk about the currency strength meter real quick, and this kind of give us an idea about what's happening with the market. If we click on what's happening right now, we can see that the Australian dollar and New Zealand dollar are very weak when it comes down to this overall pair right now. And if you look at what's going on right now, there's really no clear winner when it comes down to people that are above. So that means that this market is in a state of, once again, transition when it comes down to the overall weeks. I would look at being able to trade on pairs that have been in a position to where they've been very weak and try to see if you can try to get something out of them on pairs that have been very strong. So we've been trading the US dollar because the overall strength of it. And if it keeps on moving towards this median line, then more than likely one of these pairs down here at the bottom is probably going to start moving up. So if we look at it, US dollar is strong, Australian dollar is weak. So what I ended up doing was I ended up taking a scalp on the Australian dollar, United States dollar, and I'm actually in the scalp right now. And I'm going to hurry up and go through the US dollar index and everything else like that, because I want to give you an idea and give you a chance to see if you can be able to get into this market. US dollar index, if we look at this overall spot, we can see that this market has hit the 382, so the market is considered to be healthy. Currently, right now, it's in a market no trade zone. It's in an R6 zone at this particular spot, meaning that if you look at the upfield trades from here to right around the 5-0 position, As long as the market kind of keeps on moving up right there, typically you don't want to trade this market to the upside, unless you just have a true feeling that the market is going to end up pushing up. You would typically like to wait on this if you want to sell. Well, in this case, we want to be able to buy, so it's okay that it's actually going through and having a little bit of being a little bit stagnant right now, because quite frankly, it's had 2 strong days of being able to have a push. So typically the 3rd or 4th day, you're probably going to end up seeing just a little bit of hesitation before the market starts to move. So I'm looking to be able to buy on the dollar at this particular point in time. I'm actually going against the dollar right now at this point, only because the extensions have been hit on the overall pair. So we're looking at this, seeing how this market is going to end up reacting to it. All right, now we move over to oil. We see that oil actually ended up breaking the trend line. It's still in the sell zone, but it's starting to retest this overall move toward the upside. So still looking at being able to sell this to the downside. If it breaks a new higher high, then we're out of this overall move. And then after that, we'll just wait to see how this market is going to end up moving. It's still expected that this market is going to go down to 31. Okay, it's still expected that this market is going to end up going to 31.38, and we'll see how this market ends up moving towards the upside, and then after that we can be able to make a decision on how this market is going to end up moving from there. If we take a look at what's happening with gold, gold is going through a overall retracement zone, so that means that we should see that the Japanese yen should get a little bit stronger. This is mainly once again, this is mainly because we're seeing that the U.S. dollar has had so much of a strong day for the last few days. It has to start doing a little bit of a retracement from that move. So we have this triangle. It have the broken triangle. It never retested, so we should see that this market will start to go back up and retest before actually falling back down. Now, from here, you will start to see a little bit more retail sellers start to look and try to trade that position once it gets past and breaks a counter trend line to the downside. Now, with that being said, we've talked about all 3 of those pairs. Let's get into the Australian dollar, United States dollar. This is a pair that I'm literally trading right now at this particular point. I'm going to tell you my stop. I'm going to tell you my entry. I'm going to tell you why I'm trading this to the upside. And then after that, we'll be able to go from there. If you look at this pair, we can see that this market has hit the D extension. It ended up hitting the D extension a little bit earlier. We've had on the 2 hour, we've had 1, 2, 3 candlesticks that have changed to the upside from here. If we're looking at this movement, the question is, do we have a counter trend line break at this particular point? We go to right here and we end up going out. There goes our outer trend line. We go right here and we take a look at it. We make another one. Let's see, that's our outer trend line. We go right here and we take a look at it. Do we have an inner trend line break? Yes, we do. We have an inner trend line break based off of this movement right here. So with that being said, because we have an inner trend line break and the market is in the buy zone, this is a R5 scalping trade. Now, what I mean by a scalping trade, that means that I'm very close with my stop loss, and quite frankly, I am very tight with the amount of pips that I'm trying to go after. I'm not trying to stay in this trade long. I'm just trying to get it back to a point to where I can be able to make something off of it if it starts to push towards the upside. Once again, if we go back to the currency strength meter, we still see that the Australian dollar is very low, but it's starting to creep back up toward the upside. If it keeps on moving toward the upside, we can be able to get something out of it. Anything above 10 pips on this one, I am very good with. And I'm going to say that again. Anything above 10 pips, I'm very good with when it comes down to the move off of this pair. So the way that I'm managing this overall trade was that I went to the 5 minute. I ended up seeing that we had this counter trend line break that has happened. Well, we had this counter trend line break that has happened right here. And we have some moving averages that are basically just a little bit below it. So as long as this market is staying below this overall move towards this spot, and it's a little bit in the buy zone right here, this is a trade that you can actively take right now. What you can be able to do is you can place the trade in right now. You can put your stop. You can put your stop below 71.20, or you can end up going below this overall crown low right here, which will end up being at 71.25. More than likely, you'll probably get 71.31 if you decide to be able to buy it right now. The place that I'm trading to right now on this overall pair will be a point of control spot. Now, when I'm saying point of control, that means that I'm not trading this to the 382. I don't know what a 382 is as of yet because we don't have a fractal low. But I do know that if we go back to a point of control and kind of see where the market volume was when it came down to buying, I can be able to get it into that spot. If you are entering this trade, you probably want to enter it in right now. This is a actual live type of movement as we speak. We can see that this moving average up here point, we end up going to the bottom of that. That's at 71.43. That makes a lot of sense when it comes down to this movement, but I want to get a little bit more in depth. Let's take a look at volume profile. Definitely like to get a little bit more in depth. Let's see. Give me something for the 5 minute. We have a little bit of volume right around that 71.43 area. If it breaks 71.43, talking about 71.50 as an actual number that it could go to. Let's go back to the. I want to go back to the 2 hour real quick. Okay, so hypothetically, let's talk about this from an ABCD perspective, and be able to break it down like that. And we'll definitely have a better number of being able to take a look and see where this market is going to end up going. So we have, that goes at A, let's say that's our fractal low right there. The 382 on this position is at 71.59. So 71.60 would end up being the number. We look at the volume profile from here, being able to push back up. Once again, I think it will be very slight when it comes down to this. Anything over 10 pips, I'm actually good with when it comes down to being able to get it. We see a little bit of hesitation right around 71.68. You want to keep on buying it up to there. The 618 on this move is at 71.83. If I'm taking any trade, or if I'm just trading this position and I want to be comfortable, I had my take profit at 71.50, and being able to look at this before. I still like that position. I still like being able to buy it up to 71.50 at this particular point. Once again, this is a live trade that I just enter in right now. We have a counter trend line break currently at this particular point. This is a very low risk to very high reward type of trade. As soon as we end up getting a little bit higher for this overall move, I'm going to move my stop loss in the break even. Currently, the market is at 71.33. I don't think that we're going to have like this huge explosive move or a pop to the upside. I do think that it's going to end up being a move. It probably will grind itself up there. I don't think there's a lot of people that are interested in this absolutely buying this unless you're truly trying to scalp the market. I will look at those numbers. We said 71.40 to right around the 71.50 number. See how that market kind of reacts towards that. Let's see if we can be able to get a little bit more in depth towards this number. Use for information. We don't have that much more information that we can be able to trade off of. Okay, let's go to the. Let's do this. Okay. So there we go. Point of control on this movement will be at 71.70. If this market keeps on pushing up towards this overall up spot. Now, I am interested in being able to sell right around that area. So the question would be, would I want to buy this all the way up to 71.70 and then after that look to be able to sell it right there? If we could, then absolutely. What I would end up doing, what I would suggest to you is, if this market is moving like it is, what you can be able to do is kind of move you can use a trailing stop if you're not in front of the computer all the time and be able to trade it like that. Or what you can be able to do is you can just be able to trade it to 71.50 or 71.60, take that overall profit, allow the market to be able to go up a little bit more, look and see if the market is in a 2 hour overbought zone right around the 71.70 area, and then after that look to be able to trade. I do like this position for being able to sell though. So I'm going to put an arrow by here, and I'm going to say 71.70 is the area where I would like to be able to sell for this spot. I think this is a very good position for being able to sell long term. But right now we're in a buy. So I'm very tight with this overall move. As long as this market makes a new higher high from this overall consolidation that we see off the 5 minute, then we should be good. Okay. Let's see, point of control, sell area. Our two-hour counter trend line. All right, so that makes sense. There we go. We have our first trade of the day in at this particular point. Once again, it's a scalping trade. Currently, right now, I am up 2 pips. Would love to be able to see that this market kind of breaks out of this overall area right here. It has to break out of this little small consolidation. If it does break out of that area and then after that retest towards the top side, then I feel very good about this spot. Currently, right now, we're not doing that as of yet. You can see that we're still in this. Once again, I'm very much interested in being able to reduce all of my risks on this trade while this market is actually moving up. The thing that I'm looking for is a breakout and a retest of this overall consolidated area. If that happens, then quite frankly, we are very good on this overall trade. Currently up 2 pips at this particular point. Trying to go after right around 25 to 30 pips if we can. Right now, I'm risking only $50 on this move. So you're talking about risking only $50 to be able to go after $250 off of this move. I'm very much interested in being able to do that. And well, that's the reason why I'm in the trade right now, for us being able to look at that. So we'll come back to that one. I am monitoring that on my overall computer. So everyone that's looking at this on, people won't be able to see this on Instagram because I am taking a trade base off of this one. And because I scout, because I'm scalping the market right now, we won't see it on Instagram today. I do apologize about that. So let's take a look at the U.S. Swiss franc. U.S. Swiss franc, we end up doing very well on this pair as well. We end up trading this a little bit in the afternoon, right around 10:30, to where we end up getting it and getting out right around the 91.80 area. From there, the market ended up retesting and being able to fall down right around the 91.80 area. Again, the 2-hour D extension has not been completed. I am interested in being able to buy, but I do want this market to fall a little bit. I would like this market to kind of fall back into this overall area, or at least at the support position of this area right around the 91.80 area. And then after that, look at being able to buy a little bit more long term. The reason why I want to be able to do that is because I want to get a little bit more value, because the 2-hour D extension is that overall position that has not been hit. Now, overall, if we look at this from a daily perspective, the 382 has not been hit as of yet. 382 is at 7,300. We have a counter trend line break. We have that movement. That's the reason why we end up having a huge trade towards the upside a little bit earlier, and we end up seeing the market end up moving from there. So that's where we're at right now. Currently, right now, we're going with we're about to hit on an inner trend line for this overall spot. We'll see how this market kind of reacts towards that movement. And if it does, then that means that we're good on that actual spot. Australian dollar has, it's doing a retest right now, basically at break even again. Once again, if I do lose on this overall trade, it's only going to be $50. So I'm going to keep my stop where it is right now. If it hits the overall, if it hits, if it ends up hitting the parabolic SAR and being able to break the parabolic SAR before that happens, so that means, quite frankly, it wasn't supposed to be, and the market's going to end up going down again. I just don't see that happening. But if it does, then it proves me wrong. Then I lose $50 off of the trade. $50 is not a bad loss off this trade. But currently, I'm basically at break even. We'll see. Hopefully, we can be able to get a couple more buyers at this particular point to be able to push it back up. But quite frankly, I can stay away from this computer and stay away from my phone and be able to see that I'm okay with it. We can see that this market has a overall 382 at 9,300. We are still targeting that overall position. We can see that this market is getting a little bit overextended. And with it being a little bit overextended, I am kind of paying attention to how this market is going to end up reacting to being overextended at this particular point. Are we going to end up having a retracement? Is this going to end up improving to be consolidation with this market being able to push back down? That's a couple things that we do have to think about for this move. So going back to the 2-hour, we want to be able to see a low price, but we want to be able to see a counter trend line break toward the upside, because the market is a little bit more overextended than usual at this particular point. The only thing that I'm looking at right now is, let's get a counter trend line break. Let's take the buy up to the 2-hour D extension at 72.30. If we can be able to get that, then I think we'll be in a very good position right now. Currency strength meter, we're taking a look at it. That again, we can see that the Australian dollar has started to move up a little bit, but it's still not there in that position. Once again, it's 7 o'clock, so we should see that it may end up being a lot of people looking to be able to trade, or at least being able to at this particular position, looking to be able to possibly make sales at this particular point. Once again, I don't see why people would look to be able to sell right now. And I'm hoping that this market maintains and holds at this position, and then after that starts to push back up. But we can be a little bit more patient on that one. Let's take a look at the pound United States dollar. We actually end up having the economic news to be able to happen right here for this move. We're getting a huge push to the downside off of this move. May be out on the may have to be out on the Australian dollar, United States dollar. Let's see. It is looking at the 100-day moving average right now. Has not broken as of yet, but there's a engulfing candlestick between all three of those moves. We have a top move right here. I'm out of this pair. Let's see. Let's see if it. This market has to close below this overall candlestick. If it does, then yes, it did. I'm out. I took a small loss, 38. I took a small loss. It was 38 pips, but we'll look and see if we can be able to catch it again if it does give us a move towards the upside. But that was a break towards the downside. Sometimes, once again, that happens. But only lost 3 pips off of this move. It's only a $30 loss because I moved my stop back up. And if we can be able to get a move toward the upside and a counter trend line break, then we'll look to be able to trade it again. But if not, then it is what it is. Obviously, we want to be able to trade this to the downside a little bit more. That's why when you scout the market, you really hold your stop loss very tight when it comes down to that position. Let's see. Going back to the pound dollar, we see that this market has broken an inner and an outer trend line. It has retest. We have that move to the downside for its overall breaking. Currently, right now, if we're looking at an overall position, we can be able to place our stop in and see where we are at. We are at a R3 position, meaning that we're looking to be able to sell this, long term, or looking to be able to sell this at this particular point towards the downside. We can be able to get a position right there at that particular number. The D extension's at 123. That's about 400 pips away at this particular point. Stochastic is not necessarily agreeing with us at this particular point in time for us being able to go. So I am kind of paying attention to that overall move. The next thing would end up being, do we have a position of being able to trade towards the downside on the 2-hour? Do we have a setup to be able to take right now? If we're looking at this position right now, it's kind of the same thing, kind of like with the Australian dollar that we were paying attention to. We see that this market has been depressed. It has hit a D extension. We have to see that this market gives us a little bit of an upside push first before making a move toward the downside. And then after that, making a decision on how you're going to end up trading it from there. So next thing that I would look at right here at this particular point is, we know that's going to end up being the case. Do we have a counter trend line break that we want to be able to trade? We want to sell this one. We only want to sell this one. I'm not looking to buy at this particular point. This market is at an R5 position. We want to wait for this market to be able to go up and push towards the top side. If we can be able to get that, then after that, I think we have a trade that we can be able to do. So looking at this overall move right here, looking for a stochastic break to the downside. Once we get that, then after that, we're good to go. And we can be able to move on. We got about 3 more minutes before we get out of here. Let's take a look at US CAD. US CAD ended up hitting the D extension a little bit earlier. I believe that the market has a point of control of 1.3380 that has not hit as of yet. But we do have a D extension that has hit. So this market is primed for a retracement before it starts to push back up to the upside. We can get rid of that pending order. We can get rid of that stop. We don't need that anymore. We didn't make that trade at that particular point. We can get rid of this support as well. Yeah. So what I would look for is that if we're going to end up having a downside movement, right? If we're going to have a counter trend line break, then I would look to be able to see this market get into the buy zone. If it's going to get into the buy zone, we're going to have to wait a few days for that movement to be able to happen. If we're going to look to be able to trade this towards the upside, then it has to be a counter trend line break that has a strong movement towards the upside. And once again, you'll end up having a very low risk when it comes down to your stop. And with that being said, we can see that the 2-hour D extension is at 1.3380, and we're definitely above the 127. The question is, do we have a trade to be able to take at this point? We kind of do. The market, if we would have got it a little bit earlier when the market was at support, we would have had a position to be able to get in at that particular point in time at 1.33, which was yesterday. Currently, right now, if we look at this particular position, if you're trading this off of the 15-minute. I'm not going to go that deep on being able to trade this one. If I miss out on 20-something pips, then I miss out on it. Not trying to risk it to be able to go after that small of a move at this particular point. So right now on this one, out on this overall move. Let's take a look at the US yen. US yen has a pop up towards the top side. It ended up going back above 105. 105 has been a strong pivot point area. We had that triangle to be able to break towards the downside. It ended up hitting almost a D extension. Well, it hit a D extension on the 2-hour towards the downside. Now, we're currently seeing that this market broke above 105. Now it's retracing, and it's going to end up tapping 105 as a past resistance, turning to future support. And if that does happen, then after that, we should see that the market should be able to push towards the upside and go from there. If that does happen, then after that, you have a trade. If you don't, if it doesn't happen, then after that, everything is over with when it comes down to that move. So that's where we are when it comes down to that pair. So that's pretty much it. There's really no trading opportunities at this particular point, portion of the morning. I think that we'll probably see a little bit more going into the afternoon. If not, we'll see a little bit more going into tomorrow's session. The trade that we just talked about, you did not get in with the Australian dollar, United States dollar. Don't worry about it. Quite frankly, I only lost 2 pips off of that move. Now, 3 pips off of that move. Understand that 3 pips cost me $30. 3 pips could have cost you $3 off of that move. But there was no reason to be able to, try to push it too much on this overall pair. We was only looking to try to see if we can be able to scout the market. And that's a very low risk, high reward trade. And every time that you do that, you want to lose a little bit and actually go out there a lot. You can be able to do that. And after that, you give yourself a chance to be able to make money over time. So the losses will always take over. The wins will always take over the losses. And then after that, you can go from there. But we have a 5-day Forex bootcamp that's coming up on September 28th to October 2nd. Once again, this is for any trader that is new, that does not have any experience, or somebody that has been trading, just doesn't have their way yet and trying to find out what their overall edge is. If you're interested in being able to learn a little bit more about being able to trade with us when it comes down to that, all you have to do is just go to this link right here, which is, if you end up going to bit.ly/believe bootcamp, you can be able to hop in and be able to see exactly what it is. If you want to go ahead and get your tickets, it is bit.ly/take action tickets, and be able to hop in from there. I do appreciate everyone's time and being able to hop in with us and being able to go from there. Like always, make sure that you end up planning your trade, trading your plan. I'll see each and every one of y'all tomorrow for another trade.